Alrighty, what's up, guys? Good morning and happy Monday. The weekend is over. It went just as fast as it came. And now we've got a Chiefs 49ers Super Bowl. I was kind of pulling for Ravens Lions. All right, we are good to go. Live different, you like KC? All right. Well, I'm happy for you. I'm a Broncos guy, so I don't really have I don't got too much ground to stand on. I think it's a jealousy thing. Being that I'm a Taylor, and I can speak on this, the whole Taylor Swift is kind of getting old. This morning I wanted to grab the link for the stream. So I start typing my name into YouTube. The first Taylor that comes up is Taylor Swift. Not Taylor Horton, Taylor Swift. And I can't quite figure it out. But all right, y'all, as always, thank you for being here this morning. For those of you in the Essentials, I'm going to be live with you again at 10:30 Central. So we shall try to find a few good trades, and we'll jump in here. So a few things to be mindful of this week. And we all know it's a strong market. We've got a bunch of buy signals. The big three score is perfect everywhere. Good structure, good momentum, and the SPX has got a big old monthly squeeze. So everything's very bullish, but a few things to at least be mindful of. Got a couple things on the old eco calendar. So on Wednesday, we'll hear from JP and the boys, the Fed. And then Thursday, you got some jobless claims. So a couple of things happening there. I think potentially more important, earnings. Amongst other names, we're going to hear from, and you might have heard a few of these stocks, Apple, Microsoft, Meta, Google, and one more big boy. Apple, Amazon, Microsoft, Meta, Google. Those 5 names make up 20% of the S&P 500. So potentially could be a bit of a big deal. Put the earnings aside, put the Fed aside, put the economic calendar aside. The bigger issue I see, well, 2 issues. One, as bullish as things are, the bigger time frames are pretty extended. You look at a weekly chart of the S&Ps, the Qs, you look at a daily chart, most things out there are trading at anywhere from 2 to 3 ATR above that 21 EMA. Now, with that being said, that's just a probabilities thing. Market going to do what the market want to do. You could buy the S&Ps this morning. You can buy the QQQ. You could buy everything, and that might work beautifully. Buying, heavy out the money calls today might be the perfect trade. But I think you want to think a bit more about the longevity of your trading career and the habits you're developing. In terms of creating a consistent living from the market, one habit I don't think you want to get in, again, even though it might work this week, continuing to push the envelope, continuing to get heavily long, continuing to be aggressive to the buy side when the market's this extended. And what it really boils down to is just risk versus reward. So going back about a month ago, you guys and gals might have seen the risk reward labels on my chart. I had kind of thrown them away. The coding was kind of kicking my butt. I think I figured it out this weekend. When I'm thinking about my risk versus my reward, that's always in relation to 2 things. How far is the current price from the 21 EMA? And then how far is the price from my target? My target typically is just 3 average true range moves above that 21 EMA. My moment in time is we've got a squeeze. We're in an uptrend. The big 3 score is a 10. We've got buy signals. And I'm working a risk reward something like I'm risking 0.5 to make 3. from an average true range perspective. Better yet, I might risk a quarter of an ATR to try to catch 2.5, 3. So checking out the label here, daily chart for the QQQ, the risk is 2, the reward is 0.8. In my book, not that ideal. And here's why. Like I said, you can buy it today. You might catch a 5% rally. If the entries you're taking are at this moment in time, my risk is 2. 2 average true range moves down to the 21 EMA. Less than 1 average true range move into my target. What do you have to produce to make that work? Not on this one example, but after 25 trades, 50 trades, 100 trades, what you're going to need to make that work. All right, my losing trades are more than 2 times bigger than my winning trades. You're going to need yourself a really good win rate. Like you got to bat like 80, 90% to really move that ball forward. I want to focus on nothing but setups that can lead to a good win rate. Right, the structure, the signals, the quality of the setup. I only want to focus on things that could have a 70, 80% win rate. But from there, guys, as far as my entries, I want my entries to dictate that I don't need a good win rate. Meaning if I can really wait for a good entry, if I'm wrong, it's a scratch. If the squeeze instead fires in my direction, it's going to be a meaningful trade. Over the course of your career, getting in the habit of taking entries like this, in my experience, is not going to work. Might work today, might work this week. Longevity-wise, I don't think it's too sustainable. And then here's a weekly chart. A risk of 2.7, a reward of 0.2. You better bat like 90%. SPX is in the same boat. It's actually a little nastier here on the S&Ps. Weekly risk of 3, reward of 0.06. I might make $5, I might lose 1,000. I don't like that. And then down on the daily, not any better. Risk of 2.6 and a reward of 0.3. Like I mentioned, though, that's just probabilities. The daily chart's up there at 3 ATR. The weekly chart's up there at 3 ATR. All that tells us as traders, there's now a growing probability, not today, not this week, but sometime soon, price might want to come back down to the 21, or at the very least, we're just going to trade sideways. And that gives that 21 EMA enough time to come up there, meet the price, and you're no longer extended. All right, that looks a little bit more like back here. We never got a huge pullback. It was a bit more just trade sideways, 21 EMA coming right on up. Now, what are things we can look for when the market's extended that might lead to the flush? I think one of the better things to look for, negative momentum divergences on lower time frames. So using the big 3 squeeze, few things here on the hourly charts. First comes momentum and then comes structure. Structure meaning the direction of the moving averages, the stacked formation of the moving averages. Momentum comes first. Monday the 22nd, momentum tops out. Down goes momentum, down goes momentum. It breaks under the 0 line. At this point, the bulls have got no gas left in the tank. The gas light is on. Price continues to try to go higher. This push higher is not like that push higher. That push higher from 47.50, you had the wind at your back. The total opposite. Momentum had bottomed. Now it's heading back up towards 0. The bulls are filling up the gas tank. They got that premium 93. Down goes momentum. Up goes the price. They gap it up. Trying to break out above that 4,900. They're trying 1, 2, 3 times. This week, I expect one of two things. One, momentum goes back above zero, and they probably take out the highs. Really strong market. Option two, the break in momentum actually leads to a break in structure. Being that the market's up there at 3 ATR, that's what I think can lead to a decent pullback. Not a huge flush, like not a catastrophe, not a markets in turmoil kind of thing, but just a buyable pullback, which I would really, really like, selfishly. If they can't fix momentum, if they can't put some gas in the tank, price might take out the 21, price might take out the 50, structure might begin to break down. So an example of what that looks like on the indicator would be the 5-minute. First goes momentum. Momentum tops out. And they keep trying to push it. They keep trying to push it, despite momentum going the opposite way. They break the zero line. They never really fix the problem, and then structure breaks. Down goes the 21. Taking out the 50. You're under the 200. 21 under the 50. Point I'm trying to make is if the lower time frames don't break down, it doesn't really matter how extended we are. The market can keep going higher. And I think one of the most important things to keep in mind, speaking of gas tanks for the bulls, the biggest gas tank ever, that big monthly squeeze. We're only 2 dots into that squeeze firing to the upside. Go back to mid 2000s, early 2000s, 1990, 1970, 1950. Historically speaking, probabilities wise, it is like one of the worst ideals, the worst ideas possible to get aggressively short and to develop a bearish mentality when a monthly squeeze just fired a month ago. I think I found one time in the last 50 years that might have worked. Every other time, you're getting ran over. You do not want to fight that squeeze. That doesn't mean we can't pull back to a daily 21. Doesn't even mean we can't pull back to a weekly 21. Point I'm trying to make is you tie it all together. This monthly squeeze is the king of the hill, the king of the castle. If that works as advertised and everything points towards it should, we're going towards 5,100. The basics of the squeeze prints, you get some momentum, you got some good structure, you get yourself a few buy signals, maybe a slingshot. If the bears can't erase that, you're kind of looking at a self-fulfilling prophecy. Squeeze fires, and they want 2.5 to 3 ATR. To me, that's the most important setup. To me, that just means I can acknowledge the fact that weekly charts pretty freaking stretched, right? I can acknowledge the fact that daily chart is overbought. Heck, I might even look for a quick short. Bigger picture, I'm drooling over the idea of a pullback so I can get long again. I want to buy more Google. Like, check out the Google weekly squeeze. And you do have earnings this week, so we shall see what happens with earnings. But check this bazooka out. Even after the breakout, they still haven't fired the squeeze. I think Google wants 160. How about NVIDIA? We're still long NVIDIA. Frankly, I kind of want to sit through a little pullback. If it goes to 650, 700, it's a really good problem to have. But I think that's such a big breakout from that weekly squeeze. I would love to buy more. Can I buy more up here? No, that's not up to me. That's up to the indicator. The indicator has no emotions. The indicator's not going to feel FOMO. Now, if I sit here and I look at that label, all right, Taylor, you are about to pull the trigger on a trade where probabilities-wise, you're risking 3.3 to make 0.3. And if I look at that and still take the trade, then shame on me. I can't buy more NVIDIA if the goal is a really good risk reward, unless the market pulls back. I just say that to say if we actually do pull back this week, lightning strikes, planet Earth gets creamed by an asteroid, I wouldn't get bearish. Now, if the daily charts break down and we're getting daily sell signals, all right, now something has changed. But again, the king of the hill, the king of the castle, SPX monthly squeeze. If that unfolds like the vast majority of previous monthly squeezes, we're going to 5K 5100. Doesn't mean I'm waking up every morning getting silly and buying more calls, buying more calls, buying more calls. Not if my risk is about 2.5 and my reward is 0.3. The NVIDIA trade we did in the mastery, that's what I think we should be aiming for. Now, this trade worked, but because of the entry, it's worked in a really big fashion. We caught the push into the breakout. We caught the breakout. We've caught every inch of the NVIDIA push. It's been a really nice trade. More importantly, because we bought it back here, if NVIDIA went lower and rolled over, it wasn't going to be devastating. I'm not going to wake up taking a huge account hit because I kept chasing. Is that a high probability setup? Nice uptrend. Big weekly squeeze. We got the slingshot signals. Momentum turns. I think it's a high probability setup. I don't want to have to make a living trading with an 80-90% win rate. I want to take a really high quality setup, and then I want to take an entry that might allow me to be profitable with a 20% win rate. Now think of how the confidence and the mindset changes going into every trade. If I really believe that, hey, I'm going to take this 10 times in a row, if 2 or 3 of them work, I've made money. But only if I take a good entry, and only if I cut that trade loose when it's time to cut that trade loose. You buy it, it breaks down, you start smoking hopium joint. All right, I've got 4 weeks to expiration, I can hold on. Or all right, I've got a put credit spread. If NVIDIA bounces, I'm going to be in good shape. What I think you're really doing is robbing yourself of the ability to make money with a lower win rate. The longer you hold on to losers, the more you chase crappy entries, you've pretty much got to be really, really spot on. So a few things for all you good people to consider. And aside from that, I'm here for any questions, anything you want to take a look at. We'll pull up the board here. Say good morning to the board. Good morning, old girl. And yeah, whatever you got, throw it on at me here. Check the futures real quick. Like little things to look for. Daily chart of the S&P futures. The ES, as some people call it. We're not as extended. Risk 2 to make 1, not my favorite. Doesn't mean we're going to pull back. However, a few things on the hourly chart. And then as far as squeezes go, squeeze me, baby. 4 hour, 2 hour, 1 hour, 30 minute, 15 minute. We got some squeezation. But again, momentum. Momentum peaked on the breakout attempt. Down goes momentum. It breaks below 0. They tried to pump it this morning. Momentum never got back above 0. Structure is fine though, right? Doesn't matter until it matters. A break in momentum is just a break in momentum. Now, if price is going under the 21 EMA, and then price is going under the 50 SMA, and then the 21's going under the 50, a little bit of a different story. Now that break in momentum might lead to a break into structure. But all right, I will hop in the chat, and I guess the overall message this week is just patience. And hey, if you are continuing to get long, just be mindful of the fashion you're doing that in. Do I think this is the stars have aligned moment in time to put 15% of my account into NVIDIA calls? No. Nah, I ain't doing that. I'm going to look really cool if it works, but I'm going to look pretty dumb if it doesn't. Can I wake up this morning, put 1% of my account into out the money NVIDIA calls, and keep things pretty much harmless? Yeah, that's totally different. Totally different. All right, what do we got? Good morning, Earl. SQ. All right. What does the board think of the old square? If my memory serves me correctly, I think there's a nice hourly squeeze here. Square. I think square broke the board. Nope, here we are. No, I was thinking of something else. If you're looking to get long, there's things in the market that grade out, I think, a lot better. Like a Google, NVIDIA. Better yet, the market itself. Remember, a lot of times we can just buy the market. As goes the market, goes the stocks. If you buy the S&Ps, pretty good chance Google's doing all right, NVIDIA's doing all right. So my thinking is when we buy a stock over the market, that stock is offering some sort of edge. There might be more squeezes, there might be better structure, there might be more buy signals. When I'm going through my watch list, and if the market looks better than the stock in question, I take it off my watch list. Weekly chart, Square gets a +4. S&Ps are perfect. Daily chart, Square gets -3. And at that point, I would pretty much end the discussion in my head on whether or not I should buy Square. Not too many things in this market have a negative score. Never mind on lower time frames, but on a daily time frame. So we'll pull her up here. We'll pull her up here. All right, momentum topped all the way back here. And they're pushing. Momentum going down. Now your 21's breaking under your 50. It's not a huge break in structure, but you're kind of at the point where if they can't fix momentum quickly, structure is going to continue to degrade. It takes out the daily 200, then you really got problems. I think for this week, the great equalizer might be that 4-hour squeeze. If the bulls can clean things up, it might fire to the upside. If they can't clean things up, that might fire to the downside. That might be what triggers a break under that daily 200. But if you were looking to get long, in my opinion, I would look at things like Google, NVIDIA, pretty much everything except Tesla. Laura, buenos dias, Laura, ROST. I think of that painter every time I see this stock. The dude with the afro. All right, so here's, I'm glad you called this one out. Momentum broke. Did they ever break structure, though? No, they never did. 200 pointing higher, the 50 pointing higher, the 21 pointing higher, 21 above the 50, 50 above the 200. The break in momentum did not lead to a break in structure. Structure, trend, stacked EMAs, everything's still bullish. So that's a bit more of a momentum break. That's just more of a break in the action. I gave you a very good push, and now I'm a little bit out of breath. If y'all don't mind, give me a week or so, maybe a few weeks to catch my breath. Drink some Gatorade. I'm going to have some pasta. I'm going to carb up. And then if structure is still bullish and momentum can bottom and then head back up towards zero, that pattern creates a slingshot squeeze. They pull back on momentum. They might even pull back on the price. If they don't break the structure, you look for that to snap right back to the upside. The best example I think of a slingshot squeeze, monthly on the SPX, because both went down. And I'm really starting to believe this pattern is what creates the biggest traps. Because visually, if you're sitting there every day, you're living and breathing every move lower, it's gonna feel a little bit scary. It's gonna feel very, very bearish. They pull back on momentum. They pull back on the price. They don't even put a dent in the structure. They actually never even got close. 200 pointing higher, 50 pointing higher, 21 above the 50, 50 above the 200. Good try, bears, but you didn't do anything. Momentum finds a bottom. Back up we go. Slingshot squeeze. So jumping back to Ross here real quick. ROST, excuse me. Could it continue to go higher? Of course. Have I missed my bus? Absolutely. Not because it's not a good setup, right? It's a great setup. Slingshot squeeze, big three scores, 8 out of 10. I missed the bus because of this. Risk of 2.5, reward of 0.4. Not to be repetitive, but just understand what your entries kind of dictate. If I buy ROST today, I better be an 85, 95% trader. I don't want to bank on that. If I'm buying it back here, I can be a 25% win rate trader, make really good money. Buying it above the 21, they take out the 21, all right, I'll cut it loose. I'll lose a quarter, maybe half. At the very worst, I'll lose one average true range. Friday morning, I'm waking up to a reward of about 2.5 to 3. I don't need to be 90%. So like a lot of things out there, I think ideally I'd want to buy it on a dip. Do I get my dip? Time shall tell. Time shall tell. Yeah, live different. That's a good rule of thumb of the squeeze. And not a rule, but more so of a good rule of thumb. Across any time frame when a squeeze fires, you tend to get anywhere from 5 to 8 plus bars of momentum. My preferred way of looking at it might happen in 1 bar, it might happen in 10 bars. But my take on it is a little bit more when the squeeze fires. You should see price hit that 2.5 to 3 ATR target. Now, it might break above that and keep going for another 2, 3, 4 bars. But that is how I like to look at it. All right, let me jump over to YouTube. Good morning to the tube. Joseph's got some Hershey. Got to get some Hershey's. What do they call them? Hershey's Kisses for Valentine's. Fellas, we can't space, all right? We got 2 weeks, boys. Let's not space out. All right, Hershey. It would not be like a trader to forget Valentine's, right? We don't forget things like that. All right, the old Hershey Dershey. So you've got a lot of squeezes. 3-day squeeze, a 2-day squeeze, a daily, a 4-hour. Only thing I don't love is that weekly score. In the monthly could be better. It's positive, but not really, not wildly positive. Not a 7, a 8, a 9, a 10. It's just 3. Just a 3. The daily's just a 1. So I'm trying to think of maybe Valero. Okay, now compare that to Valero. It also has a lot of squeezes. It grades out much better, though. Monthly chart, 3 versus 10. Weekly chart, -5 versus +8. By default, if I'm trying to see a daily squeeze fire to the upside, I can't take that trade if the weekly chart's also not lined up. That's the key. I want as many squeezes as possible, but then from a monthly chart all the way down to a 1-minute time frame, I want the indicators all on the same page. Momentum locked and loaded, structure is good, we're all lined up for a push higher. What can happen is you get a perfect looking daily squeeze. Not that Hershey is, but for conversation's sake, let's say it's the best daily squeeze you've ever seen. It's still tough for the bulls to take advantage of that. If the weekly chart doesn't look like it looked back here, that would be my favorite trade back here. I've got a daily squeeze, we've got buy signals, and then, man, look at the weekly. At that point, never mind the daily squeeze, the weekly squeeze wants to go for it. Now I've got setups and I've got multi-time frame alignment. All my bulls, all my ducks are lined up in a nice row. Even if Hershey had the best daily squeeze right now, it's going to have to duke it out with the weekly chart. 50 trending lower, 21 trending lower. We're under the 200. You will notice that momentum did bottom. So they might be trying to work on a little bit of that divergence. But I still think you want a higher quality top-down kind of thing. Give me a good-looking daily squeeze inside of a good-looking weekly chart. So that's what I'm seeing on the Hershey. All right, what else we got here? FedEx. Good morning, FedEx. Oh, I've got a bone to pick with FedEx. I've got a bone to pick with FedEx. They dropped off these metal beams that go on a tractor to my parents' house this weekend. Guy just pulls up, dumps it out the truck, and leaves. These things are like 150 pounds. Okay, FedEx, what do we got on the board? A lot of lower time frame squeezes. We got a daily and we have a weekly. No real problems to point out. It's just more of there's things out there that are stronger. Much more extended. Much more extended. But things I'd rather buy in a pullback before I bought a FedEx. And not to keep giving you the same picks. A Google, a Microsoft, a Netflix, a Meta. They're perfect almost everywhere. Where FedEx maybe not as strong. Not the kind of thing I'd want to get short. Not the kind of thing I'd be in a huge rush to get long. Not a bad daily chart, but not a great daily chart. Back here, I think you got a little bit more gas to work with. 21's above the 50. Momentum was above 0. You had a buy signal. This just kind of points towards FedEx is still trying to figure out who it wants to be this year, or at least this quarter. FedEx is going through a bit of an identity crisis. Where you can find clarity for a day trade would, of course, be on a lower time frame. You've got a really, really nice 2-hour squeeze. I don't think you buy that with the plan of holding on to it for 2, 3, 4 weeks. But can I treat that like a squeeze on any other time frame? What's my risk? 0.5. What's my reward? 2.5. I'm going to buy it here. I'm going to take it off on the break of that 21, and I'm looking for a push towards that target. If that's the weekly chart we're looking at, that might take 2, 3, 4, 5, 6 weeks. The daily, that might take 4, 5, 6 days. 2-hour chart might take 6, 8, 10 hours. Only thing that changes really is just the speed. And I think that theme of, all right, where can I find clarity? And that clarity being on lower time frames, I think that's going to be big this week. The weekly chart of the S&P is not too much context, right? It's really strong. It's also really extended. But we're not going to get a weekly sell signal this week. We're not going to see problems on the weekly chart unless the market goes down like 12%, where I can find those problems a little bit sooner, a 5-minute, 15-minute, 30-minute. And then Valero, I think Valero is, we've talked about this a lot this year in the rooms here. My biggest gripe with the energy stocks, the healthcare stocks, the financial stocks, industrials, they can be a little bit more flimsy. I think flimsy is the appropriate word, meaning like a few times per year, energy stocks keep coming up in the scans. Like perfect monthly chart, perfect weekly chart, and they just never seem to unfold into the move that they should. Now, that might be more of a personal problem on my end. But because of that, looking at all my results over the last 10 or so years, I've made a decision this year. When it comes to swing trading, I'm pretty much just swing trading these names: Tesla, Google, Apple, Netflix, Nvidia, AMD, Meta, Microsoft, and Amazon. Because in my career, those have been my money makers. And I might trade 100 different names over the course of a year. At the end of every single year, it's the same pattern. 80, 90% of my profits came from 10 to maybe 20% of the names I traded. And they're always these names. And I just say that to say I think it's an exercise you should all do. If you haven't already, print out your statements. I think on a lot of platforms you can sort P&L by the name. Try to get a good sense of who are your money makers. And then I would be a really strong advocate for pretty much making those names your entire focus. But with that being said, if energy really wants to go for it, Valero's locked and loaded. So to me, it's not a question of, is Valero a good setup? It's beautiful. It's a really, really good setup. Big 3 buy signals on every time frame. Squeezes on the weekly, the 3-day, the 2-day, the daily. Fresh momentum turn. It's a really, really high quality setup. Bigger question, is energy finally ready to go for it? And I want to look at the weekly chart here. I'm going to steal my friend Sam's analogy. Valero is like, it's a multi-million-dollar house plopped right in the middle of the hood. Energy's the hood. Weekly squeeze, weekly sell signals, negative score. You're under your 21, you're under the 50. You don't have that sector stock alignment. So I actually think that's the key. Because going back, I think about a month or so ago, Valero's in the scans, Chevron's in the scans, Exxon, a lot of energy stocks. None of them worked to the upside. And I think a big part of that was, all right, well, Valero might look great. Chevron and XOM might look great. But the neighborhood they live in has just gone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks in a row under the falling weekly 21. There is zero about that that's bullish. So that's where you kind of have that divergence. The energy names look good, but energy itself, it's got some work to do here. Now, what I will say is if XLE can finally crank out a close back above that weekly 21, if energy's going to go for it, that's when I think they're going to go for it. Call that the missing piece. So that is what I am seeing there. All right, a few more here from Essentials. And then, like I mentioned, folks, I'll be back here in about 2 hours. All right, what do we got? MRO, PG, and NVO. All right. Okay, MRO. For me, MRO would have to be a short. And the statement I should say after that is it doesn't mean that would work. I could have a negative 10 on every time frame, get short this morning, and I could get totally smoked. Vice versa, if I wake up and buy something with negative scores, I'm probably going to get smoked a little bit more often. So I want to think about my next 100 trades versus my next 2 or 3 trades. So based on those scores, that one would be a short. And that's how much I love this watch list column. When I'm doing my weekend work, a lot of times I'm not even looking at charts. If I'm going to check the chart out of something, it's got to deserve it. Like you got to earn my attention. If I'm bullish, I'm looking for a bunch of 8s, 9s, 10s. If I'm bearish, I'm looking for the opposite. Okay, PG for a day trade. So on day trades, you still want to take into consideration your bigger time frames. I wake up, I find Procter & Gamble. I've got a 15-minute slingshot squeeze. If my monthly, weekly, and daily are in a huge downtrend, and they're just totally blown out, and they got sell signals, a little bit tougher for the 15-minute squeeze to fire to the upside. Better yet, if I can find a 15-minute squeeze that's in alignment, right? Keyword, every day we trade. Alignment. I think I spelled that correctly. Want that 15-minute squeeze. If I'm getting long the 15-minute squeeze, I want a bullish 30-minute. I want alignment on the 1 hour, on every other time frame, above it and below it. Now it's gapped up here, I believe. But that would have been a good example of, hey, I got some lower time frame squeezes, and everything seems pretty bullish. I don't think that 15-minute squeeze is going to fight the good fight going counter trend. Seems a little bit more in line with the current trend. But all right, y'all. Mamacita market has opened here. Let's just take a quick look here at the indices. Any carnage this morning? Let's go see. All right, so we know we're extended. We know we have a few divergences in the works. And then checking our lower time frame signals here. It doesn't scream we're going to take out the highs. 1 hour, 30, 15-minute are neutral. 5-minute is bearish. If you want one thing to focus on, watch the hourly squeeze. If we take out the highs this week, it's probably going to be because that squeeze fired to the upside. If we're down here at the hourly 50, 48.50-ish, probably because the squeeze fired short. If we go absolutely nowhere, probably because the squeeze never did anything. All right, and then the Qs. Come on, market gods, give me a pullback. Just a little something. All right, QQQ, we have a 30-minute squeeze and a signal of sell. And from the 2-hour chart down, we're fresh out of buy signals. Now, in this recent market, we have seen this a few times. By this, I mean the bears take ownership of a 5-minute, a 15-minute, a 30-minute. Every time they drop the ball. They break momentum, they get a squeeze, they get a sell signal, they get the 21 under the 50. All that does, seemingly, is just irritate the bulls, and the bulls come out screaming. Like, oh, y'all really thought you could pull it back? All right, now we've got a reason to get out of bed. Now you got our attention, says the bulls. And they just push it right back up. We can't get a deeper pullback until the bears trigger a sell signal. Better yet, in a squeeze, and they actually do something with it. Not this cute little, we're taking out the lows, now we're popping, like break it down. Put on the big boy pants here, bears. Man up, and let's get a little dipperoo going. I am here for a dipperoo. But all right, folks, I'm going to let you go now. As always, I appreciate the time. Same time, same channel, Wednesday morning. And then, as mentioned, Essentials, folks, I will be back with ye at 10:30 Central. And at that point, we'll see what's cracking. See if we got any really good risk-reward day trades. And then we'll take it from there. But all right, folks, thank you. I appreciate you very much. Hope you had a good weekend. Hope you get your Monday off to a good start. And I'll talk to you soon.